Good morning. Ira Epstein with your SPDR ETF Weekend Edition. And this is for Sunday, and we're at the 31st of July, 2022. I told you I wouldn't leave you alone. I wanted to see how the markets were going to do on Sunday as they reopened. Was the big rally that we saw in the futures and everything last week going to give something of a correction? And it is across the board in the futures, with the exception of the dollar index and some of the grain markets. Everything's down. The bond futures are down. Metals are all down. The stock indices are down. Energy markets are down. So keep your eye on that. I'm going to be out this week. I wish I could tell you how many days. I don't know yet. I'm having some oral surgery done. I wish it was just a root canal. It is not. And I'll have some stitches. And via the stitches, I don't know when they'll let me talk. That is the big issue. My wife is jumping up and down with joy, but you can imagine me. So as soon as I'm fine, I will be doing that. For those of you that get my full research in futures, I intend on writing. The surgery's in the morning. I should be home in the afternoon. Whether I can write tomorrow, if I'm groggy or not feeling right, won't know. But I would assume by Tuesday I'm back in everything and be able to do it. So that's where we're at on everything at this point in time. I hope to be right back for you. So over the weekend, I'm reading like mad as usual. And, the schools of thought are there. They're lined up. You get the traders, Fundstrat, Tom Lee. He says, we've seen the low for the year. He's the bull camp. You get others like me that still think this is a bear market rally, that nothing has really changed. The inflation numbers haven't come down. If the jobs data on this coming Friday comes in, 250,000 and still 3.6% unemployment, gives the Fed all the ammunition they need to go after the market. And the market's not falling apart. I think you see that. Earnings have been good. So how much can the corporations continue to pass on? That's one question. Another thing I question, you had these earnings, and I realized when they came out and what periods they're for, how much of that is in the market? We did 1.25% between June and July. How much of that is in the market right now? It takes time from the time you raise it to the time the impact of it is felt. Supply chain issues, are they better? Are they worse? What's China going to do? There's still plenty of variables. But my biggest problem continues to be it doesn't act like the traditional end to a bear market. Now, I want to take the bull point of view, the opposite for you. You know why, Ira, it doesn't feel like that? Because you never had a market do this with unemployment at 3.6%, staying there. The summer's ending, more people want jobs, and that can absorb this. I get it. It's a rough call. I see the bounce. But I'm still in the camp that the Fed's going to be going strong till they're ahead of it and get their credibility back. All right, this is important. And I don't even understand what happens in September when the balance sheet rolls off. What does that do? What is the real impact? Is it minor? Is it major? But I don't see the Fed, if I'm taking the bull argument, saying, oh, no, we're fine. We're just going to go 50 basis points. And you want to tell me that now we have 175 basis points in a 90-day period, roughly, and that's not going to impact the market. Those are my different conflicting parts. Last it's summer. The A-League players in August go away. They're in Monaco. They're wherever they're going to go. 2 years of not traveling, they're gone, my friends. This is a month where they take off, especially in Europe. You do know that. So be careful with all that. All right, Meta. Didn't get much of a bounce this week. It's just laying here at its lows. Obviously, if you get over last week's high, we can make an argument, the worst might be behind it. It's not necessarily a bull trend, but it might be the end of this big break, but we haven't done that. So we had one rally carried up there. Interesting. What was the stochastic doing? We'll see that in a minute. The market was unable to pierce the 18-week average of closes. Bollinger Bands came in here, and you basically, from that point, have gone sideways, and you're embedded. I think the pros were selling this market a week ago. And I think they're looking at the 145.75 level is the area they'll come out. If the red line, which is right now at 1268, closes over 21 on Friday. I think the bears are gone from the market for the time being. KBE, all you did is rally up here to the 100-day average. By accident, I left up all these parts. I didn't mean to do that. But these are all the little tools that I use, and I can have more of them or less of them up there. We have quite a few that I use on it. But as this market was coming about here, and let's just see if I can get this to do anything, and I can. This is how the market looked on July 22nd. As we were coming up, I know I said, I think you're going to approach resistance at the combination of the 100-day in green and the 18, I said day 100 week and the 18-week average of closes right there. That's what I was looking for. So now when you look at it, why would I suddenly get wildly bullish when that's all that I was looking for? There's reasons to not be short, but no reasons to be long on the chart action that I see. I have the similar problem in XLI. I have lower lows, higher highs into those two averages. Momentum corrected. I see all that. But are you telling me you're going to go to the Bollinger Band? You might, but that's going to carry you right back to that high in the industrial sector. I'm not seeing the industrial sector of any part of the Fed regions picking up where I should be thinking you're going back to those highs. That's another issue I'm having. XLE on the energy, a bounce back to the 18-week average in a market that has collapsed from the upper band to the lower requires what? When you get to the lower band, what do I teach in my enhanced Bollinger Band course? The first thing that I teach you is the first time you hit it, upside or downside, and you're not embedded. In this case, you were not embedded. You're covering all shorts. That's what I teach, win, lose, or draw. And now the market goes back up and it stalls right at the 18-week. It's not in a trend. You have a higher high, lower low. SPY, what was I looking for? I was looking for a week ago, this is last week's video, that the market, higher lows, higher highs if we rally. And that's what I would have said because you've got all this pointing up. I've got pretty strong resistance between these two numbers. And let me come back. I just made a mistake on that, and let me get to it right here. And that's what you did. That's all that you've done. That doesn't mean you can't go higher in this Y, because at least you're right there. And if you pop, well, I guess wherever that number is comes in would be there. More times than not, that's where you got your bounce from the bears coming out. They got caught. That's where they stop. And often, that 18-week average is just a break in the market. When I mean a break, it doesn't go any further. Not that prices are going to break. It's like all the energy comes out of the F1 car. In GDX, you're still bearish. You have your embedded reading, lower highs, lower lows. When that reading, the red closes over 21, then I'm going to say, looks to me like this market is bottoming. I think along the way here, pros have taken some profits as it rode the Bollinger Band down, and it certainly is acting better. ARC, all I was looking for from here, and I said it to you here, was back to the 18-week average, and now that I'm there, I have to let it see and play itself out. That's what it has to do. Closes over 49.34 could be raked in as near-term bullish until you break through whatever the most recent low is. I'll wait for that to occur. Apple. This is what we call a vertical price rise. Every single day, the market has made a higher high, not one day to get down, make a lower low in it, and it's gotten itself over all the key numbers, the averages. It could go to 175. If I was a technician at one of the big firms, I'd be looking at this and saying, daily chart, I can make an argument to 170 level. That's where my price target would be from the 162, about $8 higher. If it falls back, the battleground should fall in between the 18 and the 100-day average. Tesla, first time back up and staying over or trying to the 18-week average of closes, trend up, bias up. Could it be going to 1,078? Possibly. Musk has got his hands full with what's he going to do with Twitter. Twitter, by the way, it's hard to believe that throwaway money that I told you about is suddenly in the green. I laugh about it. But this is the first resistance zone, the 18-week to the 200-week average. If it can clear it, that's your target on the upside. What is Mr. Musk going to do? It has nothing to do with the finances of Twitter. It's everything to do about this court case, and that case, I think, is October 17th, if I'm right. It's right in that early time frame. TLT, you get bullish. I want to be on the side of the Fed. The Fed's going to raise interest rates. So this is a nice short covering rally back into what I just said, that 18-week average, the break in the market. Remember the F1 comment I just made? Right through there. It was a great F1 today. And you look at it all and you have a time with it. But in any case, as I look at these markets, that's where you're at. Let's understand where we're at too. You're going into the slow time and the pro-trading in Europe. A lot of Americans going to get in their last vacations. Now the kids go back to school in some places mid-August, believe it or not. They'll be headed back. Others will a little later. College kids heading back. The school purchases are going on. I see it all. I get it. It happens every year. How do you play it? Well, first thing you want to do is have both hands with tools. And one of them's enhanced Bollinger Bands. It's my favorite trading tool. If you'd like to learn it, got this little piece I'd like you to look at. Remember, I'll be out for some surgery. Hope it's nothing. They tell me should be back right away. And assuming that's the case, you'll have me talking to you before you know it. In between now and then, good trading to you. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.